Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 25th of August, Friday, ending the week with big economic data and also Fed Chair Jerome Powell's speech at the Jackson Hole Symposium that we are going to review in detail. First, consumer sentiment final for August. Quite a bit lower than expected, 69, and also the consumer expectations also lower than expected. Current conditions, they are lowering their analysis, their assessments on the current conditions, and also putting higher inflation expectations from 3.4 to 3.5. We were expecting a tick lower. So basically the consumer is reassessing their sentiment and expectations, and that's worth noting because basically all the details, all what people is saying regarding the soft landing is based on the strong consumer sentiment. What will happen when the consumer starts thinking twice about spending? Well, markets will feel pain. We are now going straight to the notes, the statements that Fed Jerome Powell said on regarding the inflation and the economy on the Jackson Hole Symposium. First, he said that persistent above trend growth will warrant tightening. So markets want growth, and that's against the inflation. So what will happen? Will the Fed beat the markets? We need markets and we need prices and economy to soften in order to control growth and avoid further tightening, because that way we will beat inflation. There's no other way. That's why we need to see the economy slow down. That's what markets don't get. The Fed is prepared to raise rates further if appropriate. The door is still open for this year. Don't discount 2023 more hikes. Don't discount that. We intend to hold rates at restricted level until confident inflation is moving sustainably down to 2%. So they are not going to start cutting rates when we are at 3% inflation. They are saying that we need to move sustainably down to 2%. In order, they will be holding rates until 2%. They will not start cutting rates above that. And the Fed is attentive to signs the economy is not cooling as expected. Economy is not cooling as expected. That's why they may need to tight harder. We are in a position to proceed carefully because the economy is at stake, but I think they are committed to beat inflation whatever it takes. That's the kind of thing that I was expecting from Jerome Powell. And basically, we are at a super volatile day because this is the Nasdaq. Remember where we are. We are after yesterday's huge sell-off after Nvidia disappointment, and not disappointment due to earnings, brutal earnings, but disappointment because all retailers, all investors, a lot of traders just took profit on Nvidia. And Nvidia just did a 100% retracement. It filled the entire gap up on a huge move that is one in a lifetime. Look at this short. Huge since the open, completely retracing all the boost after earnings. So Nasdaq and all the tech stocks were basically selling. There were no option for a bounce. No option. It was just a bloodbath, a cascade of red. We got a bounce. I marked that because look at this. Sometimes market gives you these kind of things. This was the first target for the short. From the opening print, we didn't look back. Start selling. We bounce off this level a little bit and we went through that until the close. This support is the one that I was watching today. So we held that during the overnight. And if we check the 30-minute chart, I have this resistance, this support that may become resistance, this huge level, and also this pivot from yesterday. We didn't even, I wanted the price action, to see the price action in this box. because this is where if we hold 15,000 on the NQ, we might have possibility to go a little bit higher. I didn't expect to retrace this huge sell-off, but we didn't have that opportunity. We put a little bit of pressure above 15,000, but no more than that. We just couldn't hold 15,000. Look at this beautiful close. And let me tell you, the pre-market action was a little bit worrying because here we were holding about this blue dot line. This blue dot line, it's blue level on the daily, this pivot from June, 26th of June. And after this huge red bar, the most interesting outcome is just to continue selling off. But if we were holding this and we reclaim in 15,000, we might have possibilities. But I mean, that right now, it's not an option. It's not an option. I was looking for longs. Fortunately, I took this pre-market break after this initial sell-off while Powell was speaking, but I sold really too early at high of days. I didn't want to risk it. I just took it was, let me check, 600 on the day. That's enough for me. Look at this volatility. Down, back up, and back down. We took the 15,000 buyers. That's a lot of people trapped, and we are continuing lower. That's my initial assessment, and we are just going to test pre-market lows. And let me tell you, everything is going red. Banks are in the red, financials are in the red, stocks are in the red, tech stocks, gold, copper, metals, and you would expect that dollar is pushing, and that's exactly what it's doing. We are seeing continuation after 103,400 reclaiming, and the daily is continuing higher. I've been saying in these videos 105 is the target, and yields are also pushing higher. 501, the 2-year yield, it's above 5%, and also the interest rates for March, this is interest rates futures for March next year, it's pushing higher, 1%, 12 in the green today, 5.4%. And this is May interest rates futures for next year, 2024, 5.3, 1.44% in the green. So that's what I'm saying. We are seeing convergence in the markets. Stocks selling off, strong dollar, strong yields after Jerome Powell. It's saying to the markets that there will be more hikes if we are not seeing enough cool down on the economy. And the markets are adjusting. And based on the technical setup on the daily, on the rejections on the 30-minute chart, and also on the 1-minute chart volatility, it looks like we are seeing selling pressure across the board. Finally, let me just highlight the FOMC FedWatch tool because something happened today. We've been seeing these November and December probabilities for a rate hike going higher. This was 30% a couple of days ago. Right now it's 42% and 40, so basically even, still flat for the no hike, but November and December after Jerome Powell's speech, it's looking more and more attractive for a rate hike, and markets are adjusting based on that. That's the path currently until May. We are not seeing until June any kind of interest rate cut, but this is just speculation. Right now, we see no hike at September, but November and December are even. There's still a probability of an interest rate hike in those months. So be really careful if you are still bullish, because fundamentals are there for you to really pay attention. And also the technical setup after this huge sell-off. I mean, for today, honestly, the target for me, if I was short, would be 14,600, around that, to really retake, reclaim, and retest this pivot. And also the last week low that is exactly this pivot. So if we check the weekly candle, this is just pure rejection. So if you are still bullish, please take into account all these things. other markets, dollar, yields, interest futures, banks, sector funds, metals, because that's what sentiment is built on. Sentiment across the market is right now just pure red, a pure disappointment after Jerome Powell reminded again the market that the door is still open for further interest rate hikes unless we see movement to the 2% on inflation. And it is what it is. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel. I upload videos every single day. I'm glad you are following my videos, you are subscribing to the channel. Thank you for that. I'm trying to provide you with daily summaries, daily highlights for you to really understand the markets and try to make your own assessments, your own strategy to trade these markets. Even if you like futures, if you like cash, ETF, if you like dollar, forex, yields, bonds markets, I'm trying to teach you everything that I know. And I hope you really like it. So thank you for supporting the channel. If you are green the week, I think I would be calling it. That's what I'm doing, and I will enjoy the weekend until Monday. So stay safe and see you on Monday.